What's up, guys? I hope you're doing well. So if you guys haven't noticed, with everything that's been going on, specifically with like the whole Russia-Ukraine conflict and everything else, there's a lot of talk about what the United States and a lot of other nations have done in terms of kind of monetary sanctions in a way. Not just like with the trading stuff with energy and so on, but more so like along the lines of kicking uh, some Russian banks out of SWIFT, and also the United States freezing some of their Russia's foreign reserves, and kind of what implications of that could have on like the future of the monetary system from an international standpoint, right? And so I found this article from some like think tank in Beijing. So it has they obviously make comments about the renminbi and stuff, but definitely worth talking about, and just stuff in general. So, the international monetary environment dominated by the US dollar and the economic environment in the post COVID era will all undergo changes. These changes will usher a new geo-monetary evolution, right? So, this is a rather interesting argument, and I've seen it go both ways, where there's a lot of people talking about, like, with using the nuclear option of the United States kicking Russia out of SWIFT, and so on. That this would be like, hey, if the United States is going to weaponize the dollar this much with Russia, what are they going to do to other countries if they disagree with what they're doing? So is the United States just going to be a major monetary bully or whatever that may be? I've also seen arguments to where actually yesterday, I forget the name of the guy. He's some research analyst for a private hedge fund. He was on a recent Macro Voices interview. Um, and I think I put it on my Insta story because it was interesting. Daniel LaCall, I think is his name. That looks like the right one. Yeah, Daniel McCall or LaCall. Um, and he brought up an interesting point. I think specifically just with the sanctions. To where it was like, hey, this isn't just the United States. This is, the Eurozone, Japan. They're doing that. They're doing them too. So it's not necessarily going to destroy the United States hegemony on from a monetary standpoint, which is an interesting point of view, because there are a lot of others who have all obviously an alternate point of view. But anyways, which is another reason why I'm kind of glad I found this from a Chinese think tank. It's like and something and bound is the name of it. Yeah, Anbound has pointed out in the past that the international monetary system is evolving from a currency system dominated by the U.S. dollar to one that is more geopolitical and diversified. Basically, I've seen major arguments about the kind of in the future we'll probably see like a bifurcation of the world where you have that big. It's no longer like this whole globalization kind of concept. It's more of you have the East and the West, and they're very distinct, which is definitely an interesting argument. Um, so the major economies led by the United States have launched a new monetary policy model, continuously promoted monetary easing. Um, that's nothing new. Quantitative easing has been going on for over a decade, basically, minus the taper tantrum and miscellaneous things in general. But although these policies helped the United States quickly get rid of the impact of the financial crisis, they also led to the continuous decline in the value of the U.S. dollar currency. Um, this policy of prioritizing domestic needs and sustaining domestic asset prices will make currencies increasingly a necessity for economies of all kinds. Okay. Um, Basically comparing it to how is this going to do with other foreign currencies and such. So, on the one hand, the increased volatility of the US dollar and the increase of international capital flows have brought a lot of interference to the trade and investment of other countries, which has affected the globalization of capital. On the other hand, countries that cater to the Fed and their monetary policies, thus bringing constraints to the domestic monetary environment and economic operation. Excuse me. So yeah, there's a lot of things that go into this. Mostly just with the different. The problem, especially with the international monetary system, is there are a lot of cross currents and there are a lot of things that you can't just be like, hey, it's kind of like inflation or deflation, to where one of the best kind of analogies I've seen is how they're really it's like two tectonic plates, right? You have both going on at the same time and they're pushing against each other. It just depends on which one's winning, right? So you have like inflationary forces and deflationary forces, and they're pushing against each other. And basically, when inflationary forces are getting stronger, you kind of just you see more inflation. Um, it's really the sum total of all those forces going on that you really actually get to measure and see, at least clearly, it seems. And they also bring up like the distortions in the supply of energy and commodities brought about by the uneven economic growth have also led to constant price adjustments in related commodities, bringing upon about impacts of international trade. And so you can see this a lot with like natural gas. I think where it's a hell of a lot cheaper in the United States than it is in Europe. And I think with like gasoline and stuff in general, because I know I think they pay the equivalent of like $12 a gallon of gas in the eurozone, like on average or something like that. It's a lot more than we do here, and there's a lot of things that go into that. Especially with oil prices, and then like the difference between the oil prices you see and then the actual future, or and then the actual like gas prices you pay at the pump. There's a there's a whole supply chain that goes down, and there's so many things that can go on. Like you have to deal with refiners, and like why the price of diesel was so high was like, or like, because I know like here I've noticed the price of diesel hasn't been going down as much as regular gas has. And basically, they all spiked up, almost like within a week. It went up like $1 down here, and then regular gas is coming back down, but diesel's staying up there. And I saw like something that's like it's natural gas, I think, that they use in the refining process to pull the sulfur out of to make diesel fuel. Like it pulls the sulfur out of the gas or whatever to make diesel, or at least the diesel you can put in like your trucks and such. And so without that amount of natural gas, or I think it's natural gas, but without this commodity, they can't pull the sulfur out, and that's why there's a lot less supply of diesel, which is why the price is getting a lot sticky and it's not coming back down with regular gas. At least that's one argument that I read, and that stuck in my head. And it kind of fits the narrative or what's happening down here where I am right now in the Florida Panhandle. Um, So, among the financial sanctions imposed on Russia, Europe, and the United States not only excluded Russia from the SWIFT system, but also restricted its transactions in the international capital market. International financial organizations such as the IMF and World Bank are also participated in the relevant sanctions. This will not only severely damage Russia's economy and finance, but also inevitably affect the independence of the current dollar based international financial and trade settlement and clearing system in the long run. Right. And so basically, um, there's a main argument that I've noticed that basically with the United States and everyone showing their cards for the dollar based system, there's obviously going to be an incentive to create an alternate system based on some other currency. And so, like, instead of SWIFT, they can use chips, which is using the Chinese renminbi, I think, or something. Using the Chinese system, I forget what it uh, stands for. Um, Maybe I can pull it up. I don't think that's it. Anyways, I don't want to waste too much time. But yeah, there's other ways to get around it, and it's also like that. Specifically with Swift, it wasn't all Russian banks, and then like Swift is just kind of like like a messaging system between the two, so they can still like call them. I think it's not like it's not like Russian banks can't still transact internationally. That's not true. It's it's just a lot harder, or at least a little harder, um, to do so. And if you want to listen to more nuance on kind of the topic, again, I'm going to plug in Jeff Snyder and Emil Kalinowski's Eurodollar University for this one, because they talked about it quite a few, and I obviously need to re-listen to some of those podcast episodes because they were really helpful. There was a lot of information in there. Okay, so kind of a final note on this one, on this webpage. In the process of promoting the internationalization of the renminbi, it is necessary to adhere to a broad, inclusive, and open attitude. China should neither intervene in the market too much because of exchange rate fluctuations, nor should engage in cliquing. I'm assuming that's how you say that. I honestly don't know what that means, at least that term. But basically, their argument is like, we need to make like an analog for where the renminbi is on the other side, probably for like the East. And this was an argument that popped up in that one Macro Voices podcast I brought up earlier with the Daniel Lakel, or whatever his last name was. And he brought up is like, the renminbi is used in like less than 3% of global transactions, even from Chinese internationals. So it's like he doesn't see that as a competitor to the US dollar, because it's really not the dollar currency itself, it's the network effect that makes it so like important. And I think this kind of ties into some of the stuff I've talked about in previous videos with the shadow banking system, on how they'll create like dollar denominated loans and that are outside of US control. And so there's a lot that goes into this, a lot more so than people think. It's not so cut and dry as we would like. That's why economics and such is known as kind of a pseudoscience in a way, because it's not like physics to where it's like logical step by step by step by step. There's a lot of nuance, and things change depending on context, from my understanding, and it's just, who knows. It just takes a lot of study and a lot of you have to like actually understand the system as a whole to really make a educated argument on some things like this, and to really forecast. And a lot of the times it's kind of pointless to forecast anyway. That's why you see like it's specifically like with the stock market, to give an example, like the people who are very successful, so to speak, long term, over a lifetime, and that kind of stuff, they very rarely try to forecast, because they don't really. That's not really the nature of the market, at least to my understanding. I mean, it's interesting to try to do it, and it's fun. It gets a lot of views, but are you really successful long term? The probability that's probably a lot lower. But anyways, that's all I got for this one. Pretty interesting developments, especially from a macro point of view. This stuff is absolutely fascinating. So who knows? It's definitely worth studying and talking a lot more about. I hope you guys have a good night, and I'll see you on the